Welcome back to the channel, everyone, and thank you for tuning in. Yes, it is the weekend, and you know how I do. I love pumping videos out because I love to make content that I feel like is going to be, that's valuable for one, and that's going to help individuals. If you're someone out there that's struggling in your trading day to day, you've come across the right channel, especially if you are a futures trader, and it doesn't really matter what market you trade when it comes to the futures. I trade primarily the index, but let's say you trade commodities, maybe you trade gold or oil, or maybe you trade some of the grains or the meats or the currencies. It doesn't really matter because the way and style of how I trade, the strategy in which I stress and express and show time and time within the videos covered here on my channel, again, is supply and demand. Supply and demand is a universal strategy that you can trade no matter which market, okay? It does not matter if you trade Forex, options, futures. It is universal, so please understand that. There's a reason why I trade it, and I've been sticking to that, for all my trading career pretty much, okay? Because I found consistency and I was able to become a profitable trader in doing so. Because when you're trading supply and demand, you're getting in at you're waiting for the market to pull back to a key area where there is aggressive buying or selling. So understand that part. If you're someone new watching this channel for the first time and don't understand supply and demand, I don't care if you don't learn it from me, but please learn it from somebody if you're interested in understanding supply and demand, because it is truly the golden way that is going to provide you the outlet to be consistent, all right? I'm not saying that there's not other strategies out there that may work, but for me, it has worked time and time again, and this is what I have built my foundation on and surrounded myself to become a profitable trader, which has helped me, okay, over the years. So if you're looking for something that is truly going to turn your trading around, I would highly recommend taking a look at supply and demand. This video here is to really stress the point that you do not need indicators in your trading, okay? I'll say that again. If you're someone that believes truly that you need indicators to trade with, well, I'm here to tell you don't, okay? Because the way I learned from trading a naked chart. That means nothing on the chart. I use the volume profile because I like to see it on the right-hand side of my chart. Those that follow the channel, you see that it's on every one of my charts. But I don't use that as a, how should I say this? As something that tells me when to get it in the trade, okay? I use it as a means of like a GPS. You get in your car, you're turning your GPS on, you need to go from point A to B. I use it in that reference because volume is extremely important when it comes to trading on the daily. Again, indicators for me, no. When I started using indicators from the beginning, that's where I started struggling, okay? Because I was waiting on a certain indicator to give me a signal, in accordance with price action to be able to get into a trade. I made mistakes doing that, okay? So again, the best way to truly start off and be on the right foot in trading is to use a naked chart. Oh, what do you mean? A naked chart, nothing on it, only look at the candles, the movement of price. Once you study that and master what I call market structure, okay? And it is called market structure, okay? It is the flow of the market. It is the movement of what the market is doing in any particular session or historically. You've got to understand that because you have to understand the reading, or not say reading, but you have to understand the cycle in which the market moves. The market's going to, how a lot of traders like to say, mirror itself. It does. It's going to move up. It's going to then fall to the wayside or fall down, start breaking structure, whatever the case is. The market has to move in certain ways because it has to go back and basically tap in and fill every imbalance or gap within the market, okay? People don't understand the idea about imbalances. It is powerful stuff. I talked about it in many videos, okay? And that's why I use it. Imbalances is a part of my trading when it comes to supply and demand. You have to understand, if you see gaps within the market or you see imbalances in between candles, the market is going to fill those areas at some point. It has to, okay? It definitely has to. But that's in another video. I've talked about that in several videos here on the channel. If you're interested in understanding about imbalances or gaps, please do yourself a favor. Go to the home page and then that little magnifying glass, click on that and you can type in imbalances or gaps and you find some videos where I talk about that. But look, what I want to jump into here is to just basically show you that you do not need indicators to trade with. Just following the flow of the market, understanding market structure. When you are able to read the market, I'm going to tell you, you're 90% or more there, okay? The other part of it is really going to be up to you, meaning maybe you have some flaws in reference to training yourself or bettering yourself when it comes to the psychological components. Maybe you're someone that struggles with fear, okay, or anxiety of taking a place in a trade because you're dealing with money, your own personal money, or maybe you have a problem with greed to where you feel like you always have to be in a trade and you want to take 10 and 20 setups a day or whatever the case is, or 10 and 20 inches. Not even to say that they're good quality setups. That's the key about trading, is taking quality setups, all right? So again, do yourself that favor. What I'm going to do, I want to put this out here, is that I'm going to put together a guide, a reference guide, basically giving a rundown of through my experience of how I see the markets and how I trade them, okay? All right? I'm not telling anyone to trade this particular way. I just want to show you the strategy and how I use it. Not in this video here. I'm going to put together and package a series of videos. And it could be one video, okay? It could be. I'm not sure how I'm going to design it yet. I'll put it together. But I'm going to make it available to the Elite membership members. So if you're not an Elite member today, I would highly recommend you clicking on the join link on the homepage or on this video and become an Elite member. Right now, even if you become an Elite member today, meaning once you click on that join link, you'll see a drop down. There'll be 2 tiers. One of them will say Elite Channel Membership. If you join the Elite Channel Membership today, what are you receiving? You receive perks and rewards. This is through the YouTube membership program. It allows us as content creators to create reward levels for our viewers, for our valuable and loyal members who are part of our channel, our subscribers. And we are able to give back in some sense. So basically what you're doing is supporting me as a content creator, pushing out valuable content because I want to be able to help people along in their own trading. So I'm giving things back. You get the perks and rewards that, say for instance, like YouTube gives, the emojis, the badges, the priority reply to comments and things of that nature. But also right now you receive the trade breakdowns. Those are videos to where I go through in great detail my trades, the setups I was looking at, the thought process during or through certain sessions, okay? So there's tons of videos like that on the channel already, and going forward, even into the new year, I'm going to drop more videos like that. As if you're sitting right next to me and I'm showing you firsthand, what I was geared up to looking at before the trade, into the trade, and where I'm looking to take the trade to, okay? It's giving you the full rundown, but you also receive the video playlist. The video playlist is a hand-selected list of videos that I package and put together by link, okay? So you don't have to sit there and watch 600 videos, okay? They cover the core, all right, of the important and pertinent videos or information that I believe that are on the channel right now. So you don't have to watch 600 videos. I packaged and picked out, I don't know, it could be 20 or 30 of them, something like that. I'm not sure. But I keep adding to it because, as I'm making videos and making content, I say, hey, this could be a great video to add into the video playlist for the Elite members. So if you're not an Elite member, I would highly recommend, by choice, if you choose to become an Elite member or Elite Channel member by clicking on the join link. You'll find where it says one of the tiers, it'll say Elite Channel Membership. Now, what I'm trying to say is that also, I'm going to put together that reference guide. I'm not sure how I'm going to title it yet, how many series is going to be. I'm not going to do it all in one session, but it's going to be like your little pamphlet in a sense that's going to give you a reference material of things to a breakdown through my mindset, based on experience, based on how I trade. I'm gonna package it all in one. Market structure, the whole price action activity, trade examples, covering the strategy, what to look for when it comes to multiple chart confluence. I'm gonna package it all together. I'm gonna go through examples. So it's gonna be your reference guide to hopefully aiding you and helping you become a better trader, or maybe wanting to make the switch to become a supply and demand trader. That's up to you, okay? I'm not telling anyone to come over and become an Elite Channel membership. If you choose to support me as a content creator, I'm just letting you know these are the perks and things that you will receive by becoming an Elite Channel member and supporting the channel, okay? All right, so it's $6.99 a month, okay? Would you rather pay that or go over and take someone's trading program or course and pay several $100s or a few $1,000s, whatever the case is? I just want to be able to share what I know with individuals through my experience and how I trade. I'm not telling anyone to trade exactly like me. But anyways, I'm rambling way too far into this video, guys. So if you're interested in becoming an Elite Channel member, just find not the link, the button that says join and do yourself that favor. I'm going to also talk about this in many more videos as I'm gearing up, wanting to put together this reference guide of just through my mindset and thought process and experience, surrounding my own personal trading, okay? And you can mirror it if you want to. There are people who become successful and find their way into success through our community members. You can check with those who are on the Discord community. We have members that are have turned their trading around from being unsuccessful on the daily to now becoming successful or on their path to become successful. Now, what I want to talk about now is, if you're not able to master, haven't conquered market structure today, all right, then you're missing the most valuable and important concept of trading. Because without it, you're not going to be successful. I'm just going to say that again. You're not going to be successful. So if you want to become a perfect day trader, you're going to have to master market structure. All right. It's the most important core concept to trading, because all it involves is understanding the movement of the market. Should I be going long or should I be going short? But the market is going to show you, and let you know how you should be trading, basically, okay? The banks and institutions are going to let you know because you want to follow in their footsteps, all right? So I've shown this time and time again. I actually did a video of this on several weeks ago, and it's titled Market Structure. You can go back and watch that video. I basically gave a freebie out, covered in great detail about market structure, okay? But I'm just going to give you a rundown and let you know that here in this video here of how the flow of the market works, okay? Because the tide can shift at any given point. So you have to switch your mindset from being long to going short. Understand that, okay? Again, you do not need indicators. Traders believe and think that they have to have a bunch of indicators on their charts to be able to trade. Waiting on X to cross Z and everything else. And I'm not going to get in until the market, this indicator does this. I'm not saying that certain indicators will not help or provide you an instance to where you can stay in a trade longer, if you're using EMAs or SMAs and maybe you're waiting and you see a perfect setup, but you're not allowing the indicator to dictate the trade for you in a sense, meaning you're not allowing it to tell you or let you know when you should get into the trade. You should be using it just as a guide or reference once you're into a trade to allow you to stay into a trade longer, okay? Maybe, you find a perfect setup trading supply and demand, the market pulls back to a key demand zone and you're above a certain SMA, okay, or an EMA, all right? And that helps you trigger to get yourself into a trade because now the market is tapped into a demand zone, all right, an untested one where there's a void or gap at, and then you're getting that trade and it's above the zone, above the SMA or EMA, whatever indicator you may be using as a reference. And as long as it's above that, it aids in part of your strategy to get you into a trade, okay? I don't trade with indicators, though. The only thing I use, I call it a tool, is the volume profile. But I'm not allowing that to really dictate or tell me when to get into a trade. I use it as a reference, like I said, a GPS. If it's a perfect setup, a high probability setup at a demand zone, for example, I'm looking to take a trade below a high volume area, okay? All right, because you have to understand the concept of buying when price is low at a discount versus buying or versus selling when price is at a premium at a higher price level, okay? But in this video here, just a quick rundown. Look, this is an example, a line diagram of market structure. I know you guys are probably saying he's showing this again. Yes, because guess what? There are always going to be new people that come into the channel that struggle with market structure, okay? All right? And, I'm sure a lot of you just as well are probably saying, man, I'm so glad he's covering this again. He talks about the same things kind of in several times in different videos, and then he shows it in different ways. I'm doing this because I'm not spending just one time or two times. I keep beating the horse, in a sense, because I want people to catch on to what I'm trying to show. All right? So this is market structure. All it is price making and the market making higher highs and higher lows, or making lower highs, and lower lows. It's moving. It has its ebbs and flows, okay? The market can move in three directions, up, down, sideways. That's it. Trading sideways, or if it's moving sideways or ranging, stay out of the market, okay? All right? Look for the best opportunities to trade. Supply and demand is when the market is breaking structure. BOS, breaker structures, are a key essential part to how I trade. I must I must see a break of structure in my own personal trading because it makes the opportunity for me to take a trade higher probability, okay? All right, so like right here, the market makes a high, higher low. Let's just say, for example, we were already making higher highs and higher lows, okay? All right, high, higher low, higher high, higher low, higher high. All right, as long as the market is making higher highs and higher lows, okay? So for instance, made a high, higher low, okay? And then this is a previous high that we just made. The market breaks that area. Then you got to ask yourself, what did it just do? It just broke structure to the upside, okay? Now, as a trader, you know, trading supply and demand, what you're looking for is to see once it breaks structure to the upside, was there any area of demand that aided in that break of structure? Was there an area of demand within this swing? If so, then you go ahead and mark it off on your chart, okay? And then once the market has already broken structure, you're just waiting for the market to come back to that area, look for rejection, all right? But sometimes the market will just do this right here. Makes a high, higher low, higher high, and then a higher low. You're waiting for it to come back here, but it doesn't. What does it do? It takes off back to the upside, right? Now, this is a new area could be a new area of demand. Why? Made a high, higher low, just broke structure here, the prior high. Anytime the market breaks structure to the upside, okay, it's taking out a major a previous high right here. That's a major break of structure right there, okay? When it takes out that prior high right there, okay? There could be some activity in between this leg to the downside right here, which I classify as internal structure, okay? And you know, those could be areas too as the market is making higher highs and higher lows as it's pushing higher to where you can look for small pullbacks to go along as well. But ultimately speaking, you know, if you're someone that's new, wait for the major break of structure, okay? And then wait for the price or the market to come back to an area of demand. So again, once the market breaks structure, wait for the market to come back to a demand area and look for the rejection. So we get these high, higher low, higher high, higher low, makes a new high here. You go ahead and mark off the zone. So I got one demand zone marked here, a second demand zone marked below it. The market can test either one, okay? So then it starts to make a low, a lower high, and then it comes to this zone here. We're waiting once it approaches that zone. This is the biggest part to trading that most people fail at is what? A lot of you guys know this because now that you have become more experienced, you've probably mastered market structure, you've become better at market structure, maybe you already understand it. But something that most traders lack is what? Patience. They fail to wait for the best opportunity to get into the trade or into a trade. This is a major break of structure once it breaks this high right here. It breaks up, pulls back, it taps into the zone right there. Once it taps into that zone right there, we're waiting patiently for the sign of a rejection. Typically, there's a couple of things you can look for. We all know that. The W formation, you know, to where the market does something like this. Just want to show you. Comes down, does this, and then boom, we look to go long at the break above the midpoint of the W formation here, okay? Right here, once it breaks there. Push down, pull back, push down, rejects again. So what it's doing here is you got one rejection, pushes up, comes back. Second rejection, then you go long, okay? That's letting you know the market is rejecting to push lower. So if it did that type of formation at a demand zone, then we would do what? We would go long, right? We're back up to this area here because now this area could be supply, you know. But in looking at this diagram, it could be supply right here, definitely so. But the way I trade, I like to see if the market, for me to shift my direction from looking for shorts to longs, the market's going to have to break through a major a prior area of structure to the left-hand side of the chart. You guys always hear me say, always be mindful to look to your left-hand side of the chart. We were moving up here. Now we're moving down. Did it break structure right here to the downside yet? No. As long as it doesn't break structure right here to the downside, I'm not looking for short opportunities yet. All right. Now, let's say it broke to this area of structure right here. All right. Am I now looking for an opportunity to go short? Yeah, you could. Definitely so. But the thing about it is be mindful because you have demand resting right below in this area here. Okay. All right. So I'll talk about this as well. What I like to see in most instances is that if we are moving lower, I like to see the market break through an area of structure. That's going to dictate and determine that now, you know, we could be shifting the tide, and my mindset should shift from longs to shorts. We broke structure right here to the downside, right? Now, let's say that the market pulled back and then made a lower low. Okay, so let's just say it did this right here. I don't want to do away with that. Let's do away with this line right here for right now. Let's move this down. Let's say it broke structure slightly right here, okay? And then I'm going to grab an arrow right here, and then it broke structure right here. Then it pulls back, and then it does this, okay? Let's say that the demand zone is resting right here. Let's bring this down just a little bit, okay? All right, okay? And let's make that the demand zone, okay? All right, so take a look here. Blow this up. It made a low, broke structure. It pulled back, okay? Then it broke this area structure right here to the downside. Continuation of when the market is breaking structure to the downside. This right here is going to be what I classify as a supply zone now. Now, if the market pulls back to this area right here, all right, now we got supply. Why? Because now the market has shifted from looking bullish to bearish. Break a structure below, all right, to the left-hand side of the chart, pulls back, made a new lower high, okay? All right, broke structure, made a new lower low. Now, back at the lower high is going to be the supply zone. If we get rejection here, where do you think I'm taking the market to? This demand zone here, because I'm going from supply to demand now, okay? This can be a demand area to where they can come down, reject, and maybe want to go back up, okay? So now, we're just going to extend this out. Let's say we got the rejection right here, all right? Then the market, let's do it, here we go. Rejects this right here, that's supply. Boom, come down here. So I'm going to take the trade back at the supply area. Once we broke major structure to the left-hand side, the market shift from looking for longs to going short now. I enter my short. My aim is going to be down here at the area of demand. That's all market structure is. It's following the structure of the market as it's moving in one direction. Then when it shifts, okay, and you were once looking for longs, now you're looking for shorts. As long as it's breaking structure to the downside like it did right here, broke structure, I'm not immediately looking for, at this point here, to go short because it just broke for the first time. It made a lower high, a lower low. Now I'm interested in going long. Now you may be saying this as well. You may be saying, well, what if it just broke this area here and then came back to this area here? All right, so let's just, let me show you. Let's say it did this. It pulled back up here, right? Just take this area here out your mind, okay? So it pulls back, okay, after breaking that area structure. Okay, so we just made a low that broke structure right here. Is this the supply zone? Yes, it is. Yes, it is. Okay, but be mindful and wait to see what happens here. Are you going to get the rejection? If you get the rejection, then boom, you could definitely aim for this area of demand below. Definitely so, or at least the low right here, okay? But you just got to pay attention to price action as the market is retracing back to the area of supply here to look, because within this leg right here, there could be some price action. There could be some area of support where the market could reject this, come down to it, and then bounce to go back higher, okay? So you got to pay close attention to that. But market structure is the key to everything. You do not need indicators to trade with. Understand, lock in, master market structure, become perfect at doing so, and then you'll be able to trade on the daily in the right direction. Trust me. I mean, you know, make your trading as simple as possible. Because like everything else in life, when you find simplicity in what it is and you don't overthink things, that's when the best outcomes come about. Okay, trading is not as hard as most people do. People get frustrated and stressed because they think and believe there's some holy grail to trading when it's really not. It's just being able to read the charts correctly, okay? All right. But just like I was saying, you know, before, I erased those arrows there. The market broke structure here, pulled back. Now it made a lower high, right? Made a lower, it didn't make a lower, it didn't make a new low here. It made a higher low here to pull back and test this demand zone. The supply zone. This area supply, you may be asking, well, is that still an opportunity to go short? Yeah, because really we haven't broken any structure back to the upside within this high and this low right here yet. We've got a leg here. The market broke structure to the downside. You know, we want to start looking and shifting our mindset to maybe looking for shorts now. This is an opportunity to take a short because now we're back at supply, to which now it can run back down to the downside right here, and then, you know, come back and test this area of demand right here, okay? But again, pay attention to price action as it's going back up to that area. So I just want to show you, an example of what I'm talking about when it comes to looking for and following the structure of the market on the charts now, okay? And you can see right here what's taking place here. The market's just making higher highs and higher lows, right? So you should be in bullish mode, right? You should be looking for and thinking, let me take these long entries, right? But not on the higher time frame, okay? I don't trade the higher time frame. I trade chart confluence, meaning I'll use the higher time frame to mark a zone. Then I'll move down to my lower time frame to look for a setup. In this case here, if the market turns its, right now it's making higher highs and higher lows. So what I would be doing is marking demand zones, going over to my lower time frame, looking for a demand setup off my lower time frame entry chart, which is my 12 range chart, to go long. Okay, because the higher time frame is telling me to go long. Beginner traders, if you're new, someone out there that's watching the video and you're struggling with not knowing, in which direction to trade, understand, master market structure, okay? That's going to let you know if you should be going long or going short, okay? When we're talking about and using the confirmation, meaning using multi-charts, using one chart as the higher time frame to tell me which direction to trade. The second chart to get you into the trade, but you're trading in the direction of the higher time frame, okay? So making higher highs and higher lows, okay? Up to the upside. But then we get a shift in the market, okay? We get a shift. Why do we get a shift? Ask yourself that question, okay? What caused the shift? Well, the structure of the market shifted to the downside. Made a high here. This is structure right here. Break structure below. You say, well, it didn't close below. No, it didn't. But it's still, this is what's classified as what? A minor break of structure, even though it wicked below. Now, most people would say, well, that's them grabbing liquidity. Them who? The banks, institutions. It is, but it's still a minor break of structure. So if it breaks structure to the downside, left-hand side of the chart, after we saw all this activity with the markets moving to the upside, as I just showed you in the diagram, now it pushed lower, minor break of structure below here, made it low. So what are you thinking now? Okay, let me go ahead and mark a supply zone because now could be a good time to maybe possibly look for a short, right? Of course, okay? So the market, I go ahead and mark my supply zone. Supply, aggressive selling. The market runs lower. I mark a break structure, minor break of structure. Then you mark the supply zone. Wait patiently. Again, the key to actually getting into high probability setups is being patient. That's something that people they struggle with on the daily, is waiting for a trade to unfold. You do not have to be in every single opportunity or movement, whatever the case is. Look for the bigger and better setups that are going to definitely turn into high probability setups. This is the high probability setup. Why? We just broke structure to the downside. Okay, this is a major supply area. Lots of aggressive selling on the higher time frame. Let me mark that supply zone. It gets back to the area supply. Let's move down now to the lower time frame chart because we want to see, all right, now we're down the lower time frame chart. What is Mike talking about when it comes to using multi-chart confluence, meaning using two charts to be able to get into a trade? All right, the higher time frame now is tapped into a supply zone, which tells me, all right, now it's probably wanting to push down. So let me see if I can get into a setup where the market shows me an opportunity to go short on the lower time frame or entry chart back at a supply area. Okay, let's go down to the lower time frame chart. Okay, so we're moved down now to the lower time frame chart. All right, just want to show you an example. This blue box, that's that higher time frame supply zone I was showing you on the 60 range chart. Okay, my higher time frame. This is using multi-chart confluence, okay? The more confluence you have, meaning the higher time frame is moving, say in this case here, we went from a bullish direction to a bearish direction, look at and back at that supply zone off the higher time frame, look to take a short on your lower time frame, trading in the direction of the trading in the direction of the higher time frame. Because now the market broke structure below, we tap back into a higher time frame supply. So I'm looking for a supply setup to take a trade going short on my lower time frame. Now the market runs back up, retraces to that higher time frame supply zone. That's what this blue mark is indicating from the 60 range chart. Okay, now gets a little tricky here because we start chopping around, but there are some small little opportunities to take a short from. You have to pay attention. I tell people when the market is retracing to a zone, you got to pay attention to price action. All right, the market taps into the zone. Okay, what are we waiting for? We're looking now that we're on a lower time. It tapped into the higher time frame supply zone. We're looking now for a opportunity to do what? For a supply setup. Okay, meaning where we get a break of structure and then the market create a supply zone on the lower time frame chart. Now taps into the higher time frame zone. Break structure below. Breaks below this area here at 46 and let's say 47. There is a supply area now that was just created on the lower time frame chart. Okay, supply zone on the higher time frame. We got a break of structure on the lower time frame. Supply created on the lower time frame now. wait for the retracement back to the supply zone now in the lower time frame. We are moving together on two charts in the same direction, short. All right, but be careful and pay close attention as the market is retracing back to the zone there in the lower time frame, because below right here we have a small area of support where the market could definitely reject and maybe want to go higher. Okay, so and you see what it does. Can you get into a small little scalp here? Yes, but be careful. When the market rejected this area, I'm gonna blow this up a little bit. You got a hammer to the downside. Rejection, it wicks back at the supply zone right here, okay? That big wick like that, and then it forms a hammer to the downside. That's a strong bearish rejection to where the market probably wants to go move lower, okay? Just for a short term, or it could be long term. We don't know how long the trade is going to play out. But you still pay attention to the price action. You're going to know that there's some areas where the market could actually bounce at. This area of support right here. The market rejects this area, all right? Let's say you got into the short right here. I would be into the short right here more than likely at 58.25. But be careful because the market can just come down and test this area right here. All right. And then which is an area of support right here off this swing right here and then push back up. That's what it did. It came down, tested support right below, rejected, pushed up, and it could have blasted off to the upside. So when you see things like this to where there's an untested, say, a support area right below, and it could be an untested resistance area right above. Okay, if you're taking a demand zone setup, then pay close attention. This is an area of support right below. It comes down to it, rejects it, pushes back. It gives you a second opportunity to get into the trade. And at that point, what you can be aiming for if you got into the trade on the second test is down this area here. Remember what I said? The market has to fill those voids, those gaps, those imbalances. Okay, those imbalances in between or in a swing or in between candles. It's got to do that. But it could definitely reject this area here once it feels that area of the imbalance right there, okay? So the second test, the market pulls back, test the supply zone again, back up to where that supply zone is on the lower time frame, the 12 range chart, rejects it. You get in, let's say you got in here right below the break of the candle, say for instance at 57. You see this red hammer, this red bearish candle to the downside, a big bearish candle to the downside. Typically what I do is I like to I'll get in once I see one candle close and then it start to break below that candle there. The best thing to do if you're really conservative with your trade is to really look for a solid break of a candle. I mean, to close the candle below. So let's say maybe you didn't get to the trade until like 55. Well, you ain't got really much area to really trade down to. If you got in here and set the break of 55, it pulls back to 57, 58, maybe 2.5 points on you, and then it comes down here and feels that little imbalance there at 62. So maybe you picked up 3 points right there. Still better than nothing, right? But there was another opportunity to where it's set up is set up again on a supply setup, okay? So, you know, some trades work better and will kick off more. It just depends on the price action as the market is retracing back to the zone. Sometimes you may not have this swing sitting right here and it just shot back up, tested the zone there, leaving a major area of gaps, okay? Imbalances that need to be filled. So without this, let's say if you took out this little swing right here, the supporting swing, okay? Or this area of support right here, it taps back into supply, and this was just a straight shot back up on a retracement back to the lower time frame supply zone, rejects that area, it's gonna come back down to here. Imagine that. So you'll see setups like that. There'll be beautiful entries like that to where there was a beautiful breaker structure on the lower time frame, pushes lower, creates supply, okay? All right, and then the market retraces back to it without any supporting swings. It may just pull back hard back to that area, reject it, and then let's say you got in here, I don't know, let's say you got in maybe around here at 56, I don't know, maybe at 55. It's going to come all the way down here to 42, and that's a beautiful trade there. But this is where I talk about being careful when it comes to paying attention to the price action, supporting areas of support, supporting swings above or below at resistance or support. In this case here, we got support. All right. So maybe you pick yourself up 3 points there. The market pushes up, makes a high here, pulls back. Okay. Makes a lower high here. Okay. Higher high, lower high, break slightly above, higher high there. And then it pulls back. Okay. Now you got another supply zone here. Why? It just broke this area structure right here below 50, say 59 right there. Okay. Came down and made a high here, broke structure on the way down, okay? Supply zone here. Now this is a nice setup right here. And we're still tapped back into, again, the higher time frame supply zone. Supply, supply. Supply on the higher time frame, supply on the lower time frame. Break structure here. Boom. Pull back, supply on the lower time frame. Where am I going to aim? I'm going to aim for down here. Down here towards the lows. Look what happens. It gets right into the zone, wicks it, okay? Now, I talk about the market tapping into a zone and then wicking away and then closing. This is where I would get in at 62, okay? Now, you hear me talk about break up candle or close a candle below the last up bullish candle right here. If you got in here, say at 60, you still got a nice solid opportunity to take the market back down to this area here, 56.5, 56. Pick yourself up 4 points, real easy. Or maybe, and maybe you got two contracts or one, or say two contracts. You got one. You're riding it down here to support, okay? And then you're holding to see if it's going to maybe take out the low right here, which it does, okay? Below here at 50, below 60, excuse me, 51. So it taps back into supply. Boom, you go short down to here, okay? And you're golden. It's a golden opportunity, okay? Because you don't have any area of support resting right below the area of supply right here until it gets down a little further, okay? So you're golden there. Now, let's say you got in, say, here at 60, and then it pulls back up to 64. And then you get a little chicken and you get a little scared, right? You're like, oh, man, is this thing wanting to go higher? No, really it's not. That's just the market, the banks and the institutions really wanting to scare people out of the market, okay? Let's see how far it went up here. Let me see. Yep. You see this? See how it goes back up there and wicks right above this area where the rejection started at? And maybe you got in here, like I said, at 60 and it pulled all the way back up here to 65. You got your stop loss sitting right there at 65, right? Remember what I talk about? When the market retraces to a zone, and I say this in multiple videos, guys that have been following the channel, those that are finding success and know what I'm talking about, you know now what I'm talking about, right? The market pulls back to this area right here, okay? All right, and then you take the short, and then it comes back and you say, well, the trade's not working out. We can't control what the banks and institutions do, but they know where most traders are putting their stop at. They know most people had entered to go short right here. When you go short, say for instance, like right here at 60, and it comes back up here to 65, pull back when you 5 points. Guess what? They're testing to they're testing buy stop areas. Okay, that's what they're doing. They're testing areas to where they know traders position their short sales at, okay? All right, so if you put your stop loss right there at 65, you're going to get stopped out. Give yourself room above the area from where the rejection started at. 4 or 5 ticks, maybe 6 ticks, whatever the case is. So it goes back up there to what? 65 1/4. They went 1 tick over that entry point where the rejection started at, okay? All right? Had you had it sitting back there 3, 4 ticks, 5 ticks, you'd have been solid. And it runs all the way back down to the low. This is what I'm talking about. I discuss this. I trade this in my own trading each and every day, okay? I stress it about using multiple chart confluence. Trading in the same direction, looking for the setups with the with the higher time frame, okay? It works if you just practice and practice and practice it. So that's what I want to talk about today is that you don't need indicators. Just use what the charts have provided you with, and that's the flow and the movement of the market. But you got to master in order to become a perfect trader, master market structure. Trust me when I say that, okay? But again, I'm going to put together, it may take a little, well, I'm not going to say it take a while, but I'm going to get to starting on it hopefully this week here, depending on my schedule. Just a short reference guide. It could be several series, maybe a 3 or 4 part series, or it could be one long video, whatever the case is. But it's only going to be available to the elite members on the channel. Those that want to become, or maybe those who are already elite channel members. We got a lot of people who have. And I appreciate each and every one of you guys that support my efforts and support me as a content creator. Those that want to become an elite channel member, again, all you do is click on the join button. There are already perks and rewards that you receive. You get the trade breakdowns, you get the video playlist. And I'm going to throw out there too. What I'm going to do is I'm going to put together a reference guide, kind of that you can use as a cheat sheet in a sense. Not say to use it as the holy grail to your trading, because you have to become one with these markets. You got to learn this stuff yourself and look for setups and opportunities yourself. I'm not going to hold anyone's hand, but what I'm going to do is put together a guide, a principle-based guide of things that have helped me, things I look for. Again, I'm going to talk about market structure, price action, leading back to zones, the supply-demand strategy that I use, little intricate details, the step-by-step process of what takes place and unfolds when it comes to using the strategy and how I use it. I talk about this And there are already successful people that are part of the Discord community. And by the way, if you're interested in joining the Discord community, find the link down in the description portion of this video. It's free of charge. Invite yourself in. Come over and join us daily on the trading floor. That's where we as traders come together. We share our trades, meaning the screenshots and posts is where members share their trades pretty much, okay? Because we find that it helps individuals out there that maybe have questions about and gather an understanding or of why a trade was taken, or whatever the case is. Most of us trade supply and demand. Not everybody trades supply and demand, but still, by putting those trades out there, you know, some of us are taking the same trades, and they are grasping an understanding, supply and demand. I cannot state how many people are part of the community that have really tapped into and understand more so today of how I trade, and have kind of turned themselves around in a sense. You know, maybe they don't trade 100% just like me, but they understand the concept, and many of them have passed these prop firm evaluations or trading with their own funds. You know, whatever the case is, they're finding a means of success, all right? And the darkness is now starting to turn to lightness. So anyways, the Discord is free of charge. Join that. Again, if you're interested in becoming an elite member, click on the join button on the homepage, or the join button on any video. You'll see it. It'll say join somewhere near the subscribe button, okay? $6.99 a month, okay? It's not a couple $100, okay? I just putting things together because my end all goal was really to express how I trade, my experience, and hopefully it inspires those that are passionate about becoming traders, especially when it comes to the future market, because that's what this channel is centered around. I just want to be able to give back what I know to those out there that may find value in this content. Outside of that, please take the time, if you're not a sub, to subscribe to the channel by clicking on the sub button. Make sure to turn on all your post notifications. Last but not least, drop a like on the video. I appreciate everyone, and have a fabulous rest of your weekend. And I'm sorry that the video was a little long-winded, but you know how I am. I like to stress things. I have to because I feel like it's the only way to get things, my point across. And people find a lot of value in these videos, okay? Because I break things down, okay? Thanks, guys.